cut of 75 basis points being announced by the Central Bank of Kenya yesterday. What did you make of that decision?
Well, the government gains a lot in that they can now borrow cheaper. We've seen the government going to the market to plug their budget deficit, and we've seen investors' flight of capital to the fixed income segment. So I think that is one of the major benefits that the government is looking to get. The other one is to spur lending. We've also noticed that banks have reduced their lending rates and moved to the fixed income markets over the last year. And this is because we've been through a slowing economic period. So I think the government is also trying to see if lowering those rates will actually spur lending. The one thing that I'm not sure will happen is that banks will follow suit, because they haven't done so in the past.
Where to from here then? Because with banks so resistant to actually lowering their rates, surely greasing the wheels of this economy is going to be as much of a challenge, with rates sitting at 7% even.
Well, I think the thing is, investors are still seeing a lot of safety in the bonds market without regard to the fact that the rate has gone lower. So we are not likely to see any shift out of the debt market for now. What I think is that we are going to see a flattening in terms of the lending over the next few months, but whichever bank will actually take the cue and lower their lending rates is going to gain a lot, because that is where everybody is going to go to. And Kenyans are now much more aware of these lending rates, seeing that we have various reports that come out showing how cheap it is to borrow from the various banks. So I think whoever actually takes the cue is going to lead the market as we go forward.
Do you see banks using this as a competitive strategy? I mean, we've just seen a slew of banks come out with their earnings reports, and all of them are reporting pretty flat growth compared to what we've been used to in the past. Do you see this as being used as a tool by Kenyan banks to actually entice consumers their way and win greater market share?
Well, I believe that's the way to go. If somebody, if investors find a cheaper way to borrow, they will go to that bank. And at the moment, it is very easy to sway the Kenyan banked population to wherever they can get cheaper and easier funds. We have seen a lot of an increase in defaults over the period that we've had economic growth slow down, and I think this would be reduced by lower rates, because then it would make it easier to pay loans. Yeah. So I believe that anyone leveraging this as will have a competitive advantage.
Well, amidst all of this, what are you making of the movement we're seeing on the NSE at the moment, and the sustainability of the slight bit of the upward trend that we've started to see emerge?
Well, I think the foreign investor is still running the market. We are still seeing the local investor shying away from equities. I think the foreign investor's model is showing them that the market is not going to go down, but will remain flat for now. But they are actually coming in and bargain hunting. So I think the moment the local investor starts coming in, we are going to see the market take an upward turn. We thought that once Safaricom reaches 5 shillings, it's going to be a signal that the market is on its way back. We are seeing Kenya Airways doing very well as well on that front.
On the Safaricom front, I mean, one school of thought that's being put out there is that we could well be seeing retail investors selling out of other stocks and positioning themselves in Safaricom, especially once we hit 5 shillings and move beyond, as you've said. Do you share that kind of thought at all, where some of the other stocks may suffer as a result of interest that's being shown in Safaricom?
Well, I don't particularly think so, because what we've noticed is that the buy side and sell side has been on the foreign side and not on the local investor side. So we haven't seen local investors actually get out of Safaricom yet. So what we are seeing is this action is actually not local, and so we're still looking at what the local investor is going to do. If they do start to exit from Safaricom, then they may take positions in other stocks, but that is yet to happen, and we haven't seen it happen yet. So at the end of the day, Safaricom remains the highest trading stock on the market, and it's really being driven by the foreign investors.
I was actually, Samuel, asking you the inverse of that. Do you see local retail investors pulling out of other stocks to participate in Safaricom?
I don't think so. I think they would pull out of Safaricom, seeing that most of them did burn their fingers on Safaricom, and they have an adverse look towards Safaricom. So a lot of investors who are actually holding Safaricom now have been waiting for Safaricom to get back into profits so that they can get out of Safaricom. What I can't really say is how much or how many of them will go and take their profits and get out, because there is a lot of them who actually got in at very high prices. 8 shillings, I think, was where a lot of people who did not buy in the IPO got in.